entrepreneurs build wealth through real estate without the headaches. I'm Toni Counts, and today we're talking about something that can make or break your rental property business. And it's not finding good tenants or dealing with repairs. We're talking about keeping your books straight. Now, before you tune out thinking that this is going to be boring accounting talk, I want you guys to stick with me because I'm going to share a story about a successful business owner who lost nearly $15,000 because of simple bookkeeping mistakes that you can avoid. So if you own more than one rental property or you're thinking about buying your second one, this episode could literally save you thousands of dollars and hours of stress come tax time. All right, so today I have my guest here, Virginia Hernandez, and Virginia has been with Start Virtual Bookkeeping for, Virginia, I don't even know how long it's been. How long have you been with us?
Well, I've been with Start Virtual for around 3 years now, Toni.
Wow.
Actually, I have started with Start Virtual as a VA or virtual assistant bookkeeper. And over time, I was really lucky to move into my current role wherein I handle training and quality for our VA bookkeepers. So basically, I run upskill trainings to help them level up their bookkeeping skills, and I also do quality audits for our clients' books so that just to make sure everything's accurate and in good shape, of course.
Yes, that's amazing. So Virginia has a very critical role with Start Virtual Bookkeeping. So she is going to be the eyes that you need on your reports. And this is after they've been through your bookkeeper's eyes, after the CSM's eyes, after the SSM's eyes. Now we're looking at the books through the eyes of Virginia, who has a wealth of knowledge in bookkeeping and all things accounting. I remember when you first started with us, Virginia, and I knew that you were going to excel in your role because I could just tell how detail-oriented you were and how thorough you were with your clients. I just knew that you were going to keep climbing up the ranks, and here we are. Now you're our training and quality control manager, which I absolutely think is the perfect role for you. So awesome. So we've got Virginia here. She's going to help share some insights on some of the things that she has seen in some of our clients' books when we take them over from either previous bookkeepers or when they attempt to do their own books. Because as we all know, a lot of real estate investors, they do make that attempt to do their own bookkeeping. I think in the back of their mind, they're just thinking that bookkeeping is this huge expense that they really don't want to sacrifice. So they think, you know what, I can figure it out. I know what I did in my business. I know where I spent money. It can't be that difficult. So what ends up happening is they sit at the computer for hours and hours and hours doing a task that a service like Start Virtual can get done in a fraction of the time for a very, very low cost. So let's go ahead and dive in. So we're going to talk about this nightmare scenario that we have with one of our clients. Virginia, you probably remember. We're just going to call him Marcus, okay? We're not going to use any real names, but Virginia, I know you remember this client as well. So let me tell you about Marcus. So Marcus owns a successful landscaping company here locally in Florida. And this guy, he really knows business, right? So he was able to build this landscaping company, grow it. He's got employees now. He's got $1 million contracts, and he's been profitable for over a decade. So 3 years ago, Marcus started buying rental properties. As he was doing lawn work for certain properties, getting to know the property owners, he kind of got interested in becoming a property owner himself. So he started with one property. Next thing you know, he's got 4 properties across different cities. So he's on his way to build wealth through real estate, which is the goal of a lot of real estate investors when they come to us for bookkeeping. So fast forward to tax time. So Marcus sits down with his CPA to do his taxes. And this is before he even signed up with bookkeeping services with us. So he's telling us this story that, his tax guy is looking at, everything that he's put together on his books, and he tells him what a disaster and what a big mess he has to unravel. And Marcus has no idea why. But really, the simple answer as to why is because Marcus did not track everything per property. So he's looking at it like his landscaping business where everything's just going in one bucket. You've got your sales and revenue, you've got your expenses, you've got your contractor costs, things like that. But when you're dealing with real estate, and Virginia, I know you can attest to this, when you're dealing with real estate, it's a whole different ballpark. Like you have to now treat each property as its own running business within one set of books. So Virginia, based on your experience, like what are some things that you've seen when we onboard new clients, just like Marcus, that have attempted to do their own bookkeeping when they own several properties?
Yes, Tony, this is one big mistake that actually Marcus did in his books because he did it by himself. So without the knowledge of bookkeeping, it really messes up his book. So new property owners, they mix their personal and business accounts into one account. So really a big mess. And what the VAs would do is, track what are the expenses for personal and what are the expenses for business. And also, as you have mentioned, there was actually a wrong recording of the entities. He has a lot of properties, but technically it was not recorded per property. It should be recorded separately. So that's actually how we should do it. And yes, misclassifying accounts. Like, for example, since Marcus is having different kinds of rental properties, so the repairs that are being done, it's actually not just repairs. It could be capitalized or as an expense. So those are some mistakes that Marcus was not able to see when he was doing his bookkeeping.
Right, yes. And that's really a common mistake across the board is I see a lot of real estate investors when they're attempting their own bookkeeping or they hire a bookkeeper that's not familiar with real estate investing, because that is super important. When you go to hire a bookkeeper or a CPA or anybody that's going to help you with your business, you want to make sure that they're experienced with the line of business that your business is taking part in. But yes, so one of the common mistakes I see from a lot of property owners or real estate investors is that when they purchase a property, and let's say, just like Marcus, he's buying properties that he's going to buy and hold. But let's say he buys the property at a very discounted price as is, and he's got to put some repairs into it before he can actually get a tenant in there. So the cost of those repairs, I see a lot of real estate investors automatically expensing those repairs. And those repairs should not be expensed on the P&L. They should actually go to the balance sheet to increase the basis of that asset. So until the property is in service, meaning that there's a tenant in place that's paying you monthly rent, that's when you have the choice of like, okay, does this repair belong on the profit and loss or does it belong on the balance sheet? And usually that's justified by the cost of the repair or the type of the repair. So for example, like if you have a tenant that is renting one of your rental properties, and let's say somebody breaks the window and you have to send a contractor there to repair the window, $150, that could be considered repairs and maintenance going directly to the P&L. But now let's say you have a rental property and you need a whole entire roof. So the cost of the roof replacement is, let's say, $12,000. So something like that would go to the balance sheet to increase the basis of that asset rather than expensing a full $12,000 in 1 month on your books, which is obviously going to skew your net profits very badly. So, yeah, all right. So back to Marcus. So with his CPA, and they were trying to get through all of those, entries that he did where he just lumped everything together for all his properties. His accountant had to charge him extra money to help him sort through everything. And Marcus still had to do the work pretty much for the accountant. Like he had to go back through his bank statements. He had to try to remember like which property Home Depot transaction was for like 9 months ago. His accountant ended up charging him an extra $3,500 for the work that he had to help him sort through. They missed the tax deadline and had to file an extension. And worse, they couldn't even prove that some of the expenses actually belong to the properties. So now Marcus is in a situation where he has to try to either find the receipts to validate that it went for the property or just take it as a loss and consider it like an owner expense. So in the end, he told us this whole story. He said he felt like a complete fool because he thought he was this, knowledgeable, successful business owner because of how successful he was with his landscaping business, but not even realizing that real estate investing is like a whole different world of bookkeeping. So that was his big rookie mistake. He came to us for bookkeeping. We got everything organized for him. We have a great relationship with his CPA because he looped us in an introduction email. And now the CPA comes directly to us with questions with just him CC'd on it for transparency. And he's completely out of the picture and we're answering all the questions for him. So now he feels a sense of relief and he's super happy and he wishes he would have hired us sooner. And then when he figured out how much bookkeeping really costs, like he really wanted to kick himself at that point because it's not this huge expense that a lot of people think. So yeah. And then, so Virginia, when you're helping our bookkeepers to understand like how these things work, the way that we should be tracking properties in QuickBooks, like what does that learning curve look like when you're doing like new recruit training and trying to show somebody like this is how we do bookkeeping for rental properties?
Okay. Yes. Since Marcus, our client, really have different properties in our QuickBooks Online, which what we are using as our accounting platform for all our clients. So what we do is track them per property, and we have advised the client to actually make a separate bank accounts for his property so that we can track the allocations of the cost per property. So we use the class feature or location feature for those properties. When Marcus came to us, his books were really a mess, but finally he was able to track the cost for each of those properties in the balance sheet and at the same time in the P&L, allocating the closing costs for all those properties. And also we have asked him to provide the HUD statements for all his properties because some clients do not know this, that they need to record those properties in their books to have a matching principle of what they have as an asset and what they have for their income. Technically, the HUD statements are really a very good document for those properties, and as well as the loans that they're getting from those properties if they do have loans. So those needs to be tracked as well.
Yes. I can't, honestly, just last week, I had someone reach out to me on Facebook and he shared with me, he's like, Toni, he's like, I bought this property, and I know he's doing his own bookkeeping. He's like, I bought this property, and he's like, and I'm trying to pay my mortgage. He's like, I paid the mortgage, it's showing up in QuickBooks, but I don't know how to categorize it. And I was like, okay, so when you bought the property, did you record the purchase from the HUD statement on your books? Because if you did that, then you would have recorded the balance of the mortgage as soon as you took it on, or whatever the loan amount was, whether you took over someone's mortgage or you took out a mortgage on your own. And then that balance will be created there on the liability section of your balance sheet. And then when you make the payment, you will figure out how much of that payment is principal, how much is interest, and then the principal portion would reduce the liability on the balance sheet, and the interest portion will be an expense on the P&L. And when I said that to him, like, he looked like a deer in the headlights. He had no idea what I was talking about. So yeah, that's another common mistake is that, real estate investors, they get all these documents for closing or even up to closing. Like if you're doing joint ventures or you're taking out private money loans, like all the documents related to that property purchase should all go to your bookkeeper because they need that information. Whether you think they don't need it or not, if it has to do with that property, I always say the more information, the better. If I don't need it, I don't need it. But if I do need it, I know where to look for it. Right? So yeah. That is another common mistake, not recording the property purchases properly. I've seen so many different rookie mistakes in QuickBooks like that, where let's say that somebody purchases a property and they get, a private money loan, so they have funds coming back to them at closing, like to go towards the rehab. So what I have seen in some people's QuickBooks is that those funds deposited back to them, they're recording it as income. And that is not even that's not even income. That's a loan at that point because you have excess funds coming back to you from loans that you've taken out that exceed the purchase amount of the property. Yeah, so easily ways to create mistakes in your books. Like I'm sure Virginia, like once one mistake is created, it just snowballs into multiple mistakes where finally when you have a professional like you looking at the books, you spot that mistake, but now we have to reverse engineer all the way back and figure out where did the mistake start from, because there's going to be a trail of edits and errors and corrections that need to be done along the way.
Yes, that's correct.
Yes, very true. So, all right, let me see. Another really good common mistake is when, and I know you just touched on this a minute ago, is when a property owner does a refinance on a property. I don't know what it is, but I feel like when they do a refinance, they don't have the urgency to let us know that as a bookkeeper, what they just did. And I feel like they don't think that it's something that we need to know. But anytime there's any type of transaction to do with any of your properties, we have to know all of that, because if you refinance a property, that means that it's going to affect the payment that's going for that property on a monthly basis. We have to be able to record any new loans you have on the property, any secondary loans, things like that. So just providing all of the documents for each property that you have, whether it's the purchase, a refinance, a sale, a joint venture agreement. And I know a lot of times our clients get, I would say, a little bit annoyed that we have to ask them for the monthly mortgage statements. But that's only because we have to break out the principal and interest, because they have to know, we have to be able to tell them in a snapshot what the balance of their mortgage is without having to go to the dashboard and pull that amount. Or we also have to have the right amount expensed for interest on the P&L as well.
Yes, actually, Tony, they also sometimes would ask us to just, expense everything for the loans, because those refinances, they didn't know that it's a debt. It's a loan from them. So we have to categorize them really as a debt or liability on their end. And then what they're asking us to do is, expense all of it, but that's not the proper way of doing it. As you mentioned, you have to separate the principal and the interest. And there's also escrows, right, that they pay. Actually, they have properties wherein they pay taxes and insurance for those, and those escrow companies, they get this also as well in their loans. So not all of our clients do know that. So we have to separate accounts as well.
And I can see how in their mind they're thinking, oh, I'm writing a check, it's an expense. But, that's why they hire people like us, so that we can show them, like, this is the proper way to do it. Because if they go the whole year with that mindset, like, oh, I'm paying the mortgage, it's an expense, let's just put it on the P&L, they're going to have a rude awakening come tax time, just like Marcus, when he was working with his accountant, and his accountant's like, what have you done to these books? He's like, you're not running a landscaping business here. You've got properties now, and it's a whole different way to do bookkeeping. And Marcus had no idea. Oh, he's this smart guy that's got this fully skilled landscaping business with 12 employees. So he was like, oh, this is nothing. I own a property now. Let's just run it just like the business. Yes. So, all right. So I know you guys might be thinking this all sounds complicated. I don't have time to become an expert bookkeeper on top of managing my properties and running my business. Well, you're absolutely right. And that's exactly why smart landlords are turning to services like Start Virtual to have a bookkeeping virtual assistant to help you with that. So we have a really great system here at Start Virtual. I always like to share with people when I'm talking about our bookkeeping services that I'm not just going to pair you up with a bookkeeper and just leave the picture. We have a really solid recruitment process. Virginia, maybe you can touch on what our recruitment process looks like, since you are part of our training with our new recruits. What does that look like when somebody makes it to you for training?
Okay, what I'm actually looking for are those who are really good, and I advise the recruitment to give us better participants, not just individual who wants just to be hired for experiences. What we get are those top-notch VAs to be part of our Start Virtual bookkeeping, since what we want to serve to our clients are best services. And we need to check if they are ready with their skills as a bookkeeper. So we're not just hiring newly graduated VAs, but we hired those top-notch VAs for Start Virtual bookkeepers. We ensure that the quality that our VAs give to their clients are really the best.
Yes, that's super important, because when you hire a bookkeeper, it's almost like you're giving away like a piece of your business's identity. You know what I mean? Like it's like a baby, like a business owner looks at their business like a baby. So it's like you're hiring a nanny to come and help you with the baby. It's like if you're hiring a nanny, like you're gonna pick like the best person with the best references that has skills and knowledge. You wouldn't just find somebody off the street and say, hey, here, watch my baby for me. Well, so that's the same thing with bookkeeping. Like we're really taking into consideration the type of talent that we're hiring here at Start Virtual for the bookkeepers that are providing services to all of our business owners. That's really important to me too, because I I have my own bookkeeping business. I started out with my own bookkeeping business before being a part of Start Virtual Bookkeeping. So for me, it's really important to provide a good service for my clients, because that's, you're a bookkeeper at that point. Like, you're in charge of the money. They're trusting you to keep an eye on things for you. So you want to be able to provide a good level of service so that you can continue to gain their trust, and then they start telling their friends about you. Because I tell people all the time, like, bookkeeping is a business that's really based on referrals. If you're a good bookkeeper, you never have to spend a dime on marketing, because they're going to tell all their friends about you. And next thing you know, you're going to have so much work coming in that you're just going to start turning it away, unless you come to Start Virtual and hire our team to fulfill your clients for you through our fulfillment department, which we'll get into that on another episode. Yeah, so once we have the new recruits, they go through the training with Virginia, they're ready to be a bookkeeper. You're ready for a bookkeeper for your business. So this is what your bookkeeper will actually do. During onboarding, if you don't have QuickBooks yet, they're going to help you set up QuickBooks Online and the right version for the type of business that you're operating. If you are a property owner, that's going to be QuickBooks Online Plus, so that we can have class and property tracking for each of the rentals. They're going to make sure that every income, every expense is going to go exactly where it needs to go on your balance sheet or P&L and attached to whatever property it belongs to. They're going to handle all the complex stuff, like recording the property purchases, any refinances, any property sales if you happen to sell a property, or even if you take part of a 1031 exchange. We know how to handle those transactions too. So at the end, once Marcus was all settled in with his bookkeeper, he told us, remember when we had the meeting with him, he said it's like having a financial expert dedicated to his rentals. Like, he says he should have hired us months ago, but he just, he thought he was this big know-it-all business owner guy, which, he's a very smart man. He's started and operated and runs a successful landscaping business. But again, once you start getting into real estate investing, it's just a whole different layer of complexities added to the bookkeeping tasks. All right, so before we close out here, Virginia, I just wanted to ask you, do you have like any tips or any special recommendations for like a new rental property business owner that maybe they could take action on today, whether they have a bookkeeper or not?
Oh, yeah, sure. Toni, it's incredibly simple. Usually nowadays, everything happens online. And with Start Virtual, here's the typical process that we ask from our clients. For the receipts, they just need to take photos of those. They can send it to us if they are unable to give us their bank statements. For easy tracking and not too much bombarding our clients, they can give us a view access of their bank accounts. So that's a big help for them. And then us, of course, we're going to categorize their properties into the class or location where those properties are located, so that each of the properties are accounted accurately, and they get their monthly reports to us showing how each property is performing. And come tax time, I'm sure that everything is organized and they are ready to go to give it to their
The best part. Yes, awesome. And just to clarify, I know a lot of people, when they hear like, oh, they need access to my bank, so we don't actually require access to the bank, but as Virginia stated, it does make things easier for you as a business owner to communicate with your bookkeeper. Again, we don't require access to the bank, but if you do decide to share access to your bank, there are ways where you can just make it a view-only access, and that's just going to cut down on some of the questions that we're going to need to ask you. Because if you take physical deposits to the bank, or you're actually writing paper checks from your account, when it comes to QuickBooks, it just says deposit and check. We don't really know what happened there. There's no detail. So when we don't know what happened and there's no detail, that triggers us to ask you the question. So we know that you're a busy business owner and you don't want to be bogged down with questions all day long. Like, what was check number 211? Who did you write it to and for how much? So that's when we suggest that you can give us view-only access to your bank, which a lot of our clients do participate in that. Some of them, they do it right away. Some of them, they want to work with us for a couple months and kind of get, a feeling of how things are going, and then they give us the view-only access. So just wanted to clarify on that. It is not absolutely necessary to have access to your bank, but it is going to be helpful for you and your bookkeeper. So thank you so much, Virginia, for being here. Did you have something else you wanted to add?
Yes, actually, since we're talking about Marcus who has different properties, we asked him to also give us his access to his Buildium and Upfolio.
Yes,
Now,
Buildium.
because of those properties, we can also, talking about the access, he can also give us access to those so that we can view the reports directly from those third-party platforms that he's using.
Yes, super important. Super important. Yeah. So usually when you are a landlord that has multiple properties, you're taking advantage of using a property manager, and that property manager is using their own software to produce those numbers for you and those, the rent collections and deducting their fees and any repairs that took place throughout the month. So you can share that access with your bookkeeper and they could go in and download those reports, because again, before we dive back into it, there is another mistake where our clients are receiving rental income, but it's the rental income already less the property management fees. So we have to get those reports out of the property management softwares like Buildium so that we can see what the gross rental amount was minus the property manager fees and make sure that it all gets recorded properly in QuickBooks. So awesome. Thank you for bringing that up, Virginia. And thank you again for joining me here. I get it, everybody. Adding another monthly expense feels tough when you think about bookkeeping, especially when you're trying to maximize your rental income. But think about it this way. Would you rather spend a couple $100s a month for peace of mind and professional bookkeeping, or risk a $10,000 plus nightmare like our client Marcus did when he decided to do his own books? I know most landlords spend more than a couple $100s a month on things that don't protect or grow their wealth, and this here will do that for you. So if you're thinking maybe I should try to do this myself first, let me ask you this. What is your time actually worth? If you spend 10 hours a month on bookkeeping tasks and you have no idea what you're doing, a professional like Start Virtual Bookkeeping can handle it for you better and faster so that you can have that time back. You need to use that time to do what you do best, which is grow your sales and revenue. All right, guys, thank you so much for joining us on this Start Virtual Podcast, episode 5, where we dived a little bit into bookkeeping. I hope we didn't bore you too much with all of the number talk. Thank you again, Virginia, for joining me today. I really appreciated having you here. And we will see you guys next time. Bye.